You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose and the Loose. Happy Monday. Today we are looking at two companies in the utility sector generating some nice and healthy income. So Capital Power, CPX, with a yield of around 4.65% versus Brookfield Renewable, BEPC, at 4.6%. So very, very similar. I'm using BEPC because that's the corporate class share. This is the one that technically should do a little bit better than the trust unit, the BEPC.TO, mostly because index funds, mutual funds, ETFs will, if they want to buy the Brookfield companies, they will go for corporate class shares and not trust units. So CPX versus BEPC, what happened over the past few years before we go into the business model? Well, over the past 12 months, CPX up 49% total return, so price plus dividend, versus 22 for BEPC, so big winner for Capital Power. But that's only 1 year, right? So let's take a look at 3 years. Well, 44.5 versus 12. So a bit of a small slowdown. So the most of the money has been made in the past 12 months for CPX, but still a lot better, 45% versus 12, right? No brainer, take CPX all day. Past 5 years, BEPC started trading in 2020. But then again, CPX ups 170%, and then BEPC up 42%. So if you look 1, 3, and 5 years, CPX have won all the way. But as you know well, my dear Moose, past performance is not a guarantee of what's going to happen next, right? So let's take a look at the playbook at what's the business model. So for CPX, we're talking really like classic utility. It's really an energy infrastructure business. Big focus now on getting rid of coal generation and everything that is not green energy, we put it that way. A big focus on natural gas. We have 14% natural renewable energy, and then the rest is growth by acquisition with that focus on natural gas based electricity and this kind of power. So an interesting play, both working in classic regulated utilities in Canada and in the US. If you look at Brookfield Renewable Energy, well, then it's a fully pure play on renewable energy. About 50% of it's hydroelectricity. The rest is wind, solar, and storage. Very diversified in terms of type of energy, but also geographically speaking. So North America, South America, Asia, so a little bit everywhere. They operate with long-term contract. It's also backed by Brookfield, of course, the parent company. So pretty solid business model here too. In terms of the dividend triangle, when you look at the past numbers, both companies shows a solid triangle. Their earnings per share is growing. For BEPC, you have to go look at the FFO per share. So it asks you a little bit more work here to build your dividend triangle, but nonetheless, both companies showing good numbers. CPX, the expected dividend growth rate has been reduced between 2 and 4%. So a little bit on the low side, in my opinion, compared to Brookfield Renewable, that is a 5% plus. So 5 to 9. As of late, it's more close to 5 than 9%, but still 5% is a lot better than 2 to 4. So a little bit more growth in terms of dividend payments from Brookfield. So overall, right now for the playbook, for the dividend triangle, I would say it's pretty much tie. if you just forget about the performance. So let's dig a little bit deeper and see the pros and cons for each stock, because it's not always simple. It's not always black and white, right? So for CPX on the pro side, well, I like the fact that they're going for natural gas. Natural gas is a really interesting play. Investors love it. It's kind of like seen to be a great alternative to a lot of other energy sources. And on top of that, they add that 14% in renewable energy. So there's a clear like shift in strategy from CPX for the past few years. They have been growing aggressively by acquisition. So you may be thinking, oh, that smells like Algonquin a little bit. In terms of strategy, grow by acquisition, yes. But besides that, CPX is using fixed debt as opposed to Algonquin that was more aggressive with the variable rate. We know now the end of that story. The other thing is CPX also shows strong funds from operation per share growth. So their payout ratio based on FFO per share is still under control. So that's not a problem. And they have already announced like a slowdown in their dividend growth rate just to focus more on making those acquisitions and focusing on that growth. So overall on that side, it's okay. On the downside for CPX, well, the debt level, definitely just talked about it, but that's a concern. I mean, management seems to be quite responsible with their balance sheet and debt and the approach with capital allocation. So focusing on CapEx right now, a little bit less on dividend increases. So seems to be responsible, but it's still, I don't know, like it's growing fast. The low dividend growth expectations as well is a down from an investment perspective, but definitely shows some responsibility. And the other thing is you have like a higher concentration in Canada and US versus Brookfield Renewable. So for BEPC, the pros, well, if you are looking for pure play on your renewable energy, this one is definitely a better story. It is backed by Brookfield Corporation, so definitely if they need more money to be invested in, they can rely on Brookfield. That's not going to be a problem. And I love also the better dividend growth perspective. And full disclaimer, I do have shares of Brookfield Renewable in my portfolio, not CPX. Over the past 5 years, I should have bought CPX, that's for sure though. On the downside, and that's where it hurts, and that explains why the stock price is not moving as fast as CPX. The company structure is incredibly complex, so it's hard to wrap your head around it, and you have to rely on management for a lot of things. So there's a lot of like renewable utilities that is being acquired by Brookfield Renewable and operated by the major company that you don't have the clear number. So you know exactly what's going on with each assets. You have to rely on management for this. You have to rely on management also for the calculation of fund from operation. And that's kind of like the center of the thesis on the one side. I mean, you can fake numbers for so long when you do those kind of distributions. So that's the thing. But in the end, it is a big risk. So if you're not comfortable trusting a management team with the numbers and the complexity of a structure, Brookfield Renewable is definitely not a good play for you, because this is the type of risk that you're facing. It is, of course, getting less traction over the past 5 years. Not necessarily a criteria for me, but I know a lot of investors are interested to see what happened before. But I mean, it's not because CPX went up by 170%, including the dividend over the past 5 years, that the next 5 years is going to be like this. If so, we would all run on this one and close our eyes and just smile, right? It's a little bit more complex than that. So in conclusion, I would say I don't think you're going to be wrong if you go for one or the other. One thing it's important to note, though, is both company has a stock price that is relatively volatile. So expect big jump and big drops. It's just part of the game for those two companies. So don't be surprised if you're up or down 30% after like 12 months. It's also part of like their pros and cons. The numbers are relatively similar. Personally, I still prefer Brookfield for two reasons: the dividend growth perspective and the fact that it is like a pure play on renewable energy. I'm not saying that the other one is bad, actually far from it. And the numbers, the performance have proven me wrong on my choice. But again, it's always a matter of conviction, not necessarily a matter of like being right all the time. Because let's be honest, we cannot be right 100% of the time. So I'd rather be 100% confident in my holdings instead. Makes my life a little bit easier. But both are great. If you're looking for like renewable, you go a bit more for Brookfield. If you're looking for a more classic play in the utility business, Capital Power is your answer. Very straightforward type of business to analyze as well. The numbers are the numbers. So I can definitely see the attraction for CPX. So two good companies, great yield, good income, and safe dividend. Kind of sounds like a good deal, right? All right, Moose, hit me up on YouTube. Let me know which one you prefer, Capital Power, Brookfield Renewable. Let's keep the discussion going on YouTube. And until tomorrow, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.